if you're right on Q2 GDP being the lowest in a few years, the Fed will most assuredly cut at the end of next month. Does that pull forward your game plan to rotate back into quad 3 exposures on a September cut?
It could. Now that's the other side of the trade that, again, the short side. So shorting tech here is not for the faint of heart, nor is shorting energy. Successfully, if you did that on the cowbell day, which was Thursday morning or Friday, you made money, big money actually on that trade. Again, it's just trades though. What is the trend? What is the economy going to look like as the Fed goes through this path and actually articulates how bad this data is? Again, just take our, God forbid, you just take our nowcast and take our outcomes that we just outlined today. We're talking about recessionary data in CapEx, recessionary data in durable goods, recessionary data in industrial, actual reported recessionary data fully loaded with a full-blown S&P 500 earnings recession. That's going to be your reality in about 6 weeks from now. And maybe at that point, there's a good spot to make the call. But I've never been the one to be buying the high. And we've been there quite often, actually, to come in there. If we do have a catalyst, we'll make that call, just like we made the call at the beginning of May to get out of tech and energy. I think we're pretty clear. We're pretty quick. My job is not to screw this up. And if I do, I don't want to stay screwed up like a lot of people do. I already am a little screwed up.
Oh, yeah. Well, everyone says don't fight the Fed. It's like we're not fighting the Fed. We're long bonds and bond proxies and gold.
I think we've front-ran the Fed.
Front-run the Fed.
Yeah, we're the only firm to front-ran the Fed both ways. We're the only firm to say that this cycle is stronger than you think throughout 2016, throughout the back half of 2016, all through 2017, the whole way up. And then make the turn and then say the Fed's going to have to go dovish if they raise rates. They did. Now they have to go really dovish. And I think that's, again, our job is to don't put us in the box that you've had to think with the old wall and all the one-liners. Don't fight the Fed. Well, not if you're the tourist who's sitting there like chasing what the Fed's doing all the time. You want to front-run the Fed by at least 3 to 6 months. All right? You want to front-run the economic cycle because that front-runs the Fed. And that's where I started with. That's what I wanted to focus on today, which is, again, giving us all a humble reminder that economic gravity does exist. The Fed can't print earnings. They can't print jobs. And we have to go through a full cycle of investing before we get out on the other side.